If the house always wins, shouldn't you just buy the house? Of course, that's not how it works. Welcome back to Casino Love. This is the 8th episode in our series where we take a factual look at publicly traded companies in the iGaming space. Today, we are looking at Aristocrat. As always, this is not a financial advice. We are not telling you what to buy, what to sell, or what to avoid. Our goal is simply to look at the company, understand what it does, and go through the latest official information. So first, what is Aristocrat? Aristocrat Leisure Limited is a public company listed in Australia under the ticker ALL. On its own websites, the company describes itself as a global entertainment and gaming content creation company powered by technology. In plain terms, Aristocrat is not just one slot brand, and it is not just an online casino brand either. It is a broad gaming content and technology group with businesses in land-based casino gaming, free-to-play social casino, and regulated online real money gaming. The company's roots go back to the 1950s in Sydney, where Aristocrat says it was founded with the creation of Clubman, followed by the Clubmaster. Over time, it expanded globally, entered casino systems listed on the ASX in 1996, moved deeper into mobile through Product Madness, and then pushed into online real money gaming through Anaxi, and NeoGames, which today sit inside Aristocrat Interactive. Aristocrat says it now has around 7,400 team members globally. That background matters because it helps explain why Aristocrat is a little different from some of the other names in this series. It is not a pure online operator like Flutter or Entain. It is also not only a live casino supplier like many viewers might first assume when they think about iGaming suppliers. Aristocrat is really a multi-vertical content and technology business that can push its brands and systems across several channels at once. Aristocrat currently reports through 3 main segments. The first is Aristocrat Gaming. This is the regulated land-based gaming side. On its investor site, Aristocrat Gaming is described as the leading designer, manufacturer and distributor of regulated land-based slot games across the globe. The business includes game content, cabinets, and casino management systems. In other words, this is the traditional casino floor side of Aristocrat. If you have seen or played games like Buffalo or Dragon Link in Casino, you have already seen the type of product that sits inside this segment. The second is Product Madness. This is the free-to-play social casino business. Aristocrat's investor site describes it as a market-leading free-to-play social casino business, and Product Madness's own site lists games such as Heart of Vegas, Cashman Casino, Slots, Lightning Link, Mighty Fu Casino, Big Fish Casino, and Jackpot Magic Slots. This is important for viewers because these are customer-facing products, but they are not real money gambling in the same way as an online casino operator. They sit in the mobile social casino space. The third is Aristocrat Interactive. Aristocrat says this business was formed in 2024 by combining Anaxi with the NeoGames businesses. It serves regulated online real money gaming markets and includes content and aggregation, iGaming and sports solutions, gaming systems, iLottery, and other managed services. Its own site describes it as a partner for casinos, sports and government customers, with offerings across iLottery, iGaming, sports betting, and systems. One useful point for investors is that Aristocrat is not only chasing one-off sales. The company's ALL about Aristocrat page highlighted about 75% recurring revenue in FY25. For an iGaming audience, Aristocrat is interesting because it touches several ecosystems at the same time. On one side, it is still one of the biggest land-based slot content companies in the world. On another side, it owns social casino brands that millions of players can access on mobile. And on another side again, it is trying to scale a regulated online RMG business that includes iLottery, iGaming content, platform technology, sports betting infrastructure, and casino systems. In investor materials, Aristocrat presents that mix as a diversified portfolio where gaming is the more established cash-generative base, Product Madness is the stable mobile social casino business, and Aristocrat Interactive is the higher growth expansion engine. Another useful detail is that Aristocrat's 2026 chairman's address said close to 70% of group revenue is generated in regulated sectors. That does not eliminate risk, but it does tell viewers something important about how the company wants to position itself. More as a social scaled content and technology company with meaningful regulated exposure and less as a speculative pure-play digital story. Now, let's move to the latest official numbers. Aristocrat released its FY25 results on 12th of November 2025. For the 12 months ended 30th of September 2025, Group revenue was 6.297 billion Australian dollars, up 11.0% year-over-year. EBITDA was 2.629 billion Australian dollars, up 15.6%. EBITDA margin improved from 40.1% to 41.7%. Normalized NPETA was 1.551 billion Australian dollars, up 12.2%. EPSA was 247.2 Australian cents, up 14.5%. Total dividend per share was 93.0 cents, up 19.2%. The balance sheet picture also looked strong in the official materials. Operating cash flow was 1.934 billion Australian dollars. Net debt ended the year at 423 million Australian dollars, down sharply from 1.140 billion Australian dollars a year earlier. Net debt to EBITDA was only 0.2 times. Liquidity stood at 2.0 billion Australian dollars. So this was not only a revenue growth story. It was also a strong cash generation and balance sheet story. One small but important detail. Aristocrat reports group numbers in Australian dollars, but some segment detail in its materials is presented in US dollars, especially for Product Madness and Aristocrat Interactive. So as we move through the division, the currency labels matter. According to Aristocrat itself, the main drivers were market share gains across the portfolio, strong organic growth, and the inclusion of NeoGames for the full 12-month period. In the FY25 media release, Aristocrat said revenue growth was driven by market share gains across the portfolio and the full-year inclusion of NeoGames. It said Aristocrat Gaming delivered market share gains led by strong outright sales, Product Madness outperformed through focused user acquisition and direct-to-consumer conversion, and Aristocrat Interactive grew mainly because of NeoGames plus organic growth in iLottery and the scaling of content. The company also made clear that it kept investing while producing those results. Aristocrat highlighted high design and development investment and disciplined user acquisition spending. In the official financial summary, D&D investment for FY25 was 800 million Australian dollars, equal to 12.7% of revenue, while Product Madness user acquisition spend was 197 million US dollars, or 17.1% of Product Madness revenue. That tells you management was not simply harvesting the business. It was still spending heavily on product, technology, and growth. Management also framed FY25 as a portfolio realignment year. The company completed the divestment of Plarium during the year and then divested Big Fish Games after year-end. Aristocrat's own message was that this sharpened the enterprise around its preferred verticals, especially slot content, social casino, and regulated online RMG. If you want to understand the company's foundation, Aristocrat Gaming is still the center of gravity. In Aristocrat's February 2026 company overview, Aristocrat Gaming generated 4.0 billion Australian dollars of FY25 revenue and 2.2 billion Australian dollars of FY25 profit. The division had 75,225 installed gaming operations units, a market-leading North American fee per day of $53.23 US dollars, and the 41,488 outright sales units. Aristocrat's own materials also show that gaming revenue is split 56% gaming operations and 44% outright sales, which is another reminder that recurring revenue matters here. Management said gaming revenue grew 9% and profit grew 7% in FY25, helped by strong outright sales and market share gains. In North America, the installed base increased by about 4,100 units. The company specifically highlighted titles such as Phoenix Link and Spooky Link, along with rollout of the Baron Portrait cabinet. It also said the rest of world gaming segment benefited from a strong rebound in Australia. There is also a longer-term expansion inside gaming. In the 2026 CEO's address, Aristocrat said North American adjacencies grew 29% in 2025 and accounted for 26% of outright sales units, with Georgia CEO AM called out as an important driver. So when Aristocrat talks about growth, it is not only talking about defending existing casino floor share. It is also talking about taking slot content and hardware into adjacent regulated markets, where it historically had less exposure. Product Madness is the part of Aristocrat that many players may know without ever thinking about the parent company. Aristocrat's materials show product madness with $1.2 billion of FY25 revenue, $0.5 billion of FY25 profit, and a 44.7% margin. The business had 21% social slots market share, 1.9 million daily active users, 16% of revenue coming from direct-to-consumer channels, and user acquisition spend of $197 million. Aristocrat also said the portfolio is heavily focused on social casino, with 91% of bookings coming from that category. The game portfolio is very visible to end users. Product Madness's own website lists Heart of Vegas, Cashman Casino Slots, Lightning Link, Mighty Fu Casino, Big Fish Casino, and Jackpot Magic Slots among its titles. So this segment gives Aristocrat a direct consumer touchpoint, but in free-to-play rather than regulated real money gaming. Management said Product Madness had a transformational year. In the 2026 CEO's address, Aristocrat said recurring social casino revenue grew 5%, while the market declined 9%, and segment profit grew 12% as margins expanded through better efficiency and more DTC revenue. It also said Product Madness is now a focused social casino business after the sale of non-core assets. That makes the segment simpler to understand than before. It is increasingly a social casino business, not a mixed mobile publishing portfolio. Now we get to the part of the Aristocrat story that is probably most directly relevant to iGaming investors. Aristocrat Interactive is still smaller than gaming, but it is clearly where the company sees major future expansion. In the February 2026 overview, Aristocrat Interactive generated $442 million of FY25 total revenue and $131 million of FY25 profit, with revenue split roughly 35% iLottery, 21% content, and 44% platforms. Aristocrat's own description is that this business is a content and technology solutions provider for online RMG and land-based casino systems with strong momentum across the business. Inside iLottery, Aristocrat's materials show about 72% wager market share in the US, 32 customers globally, and FY25 revenue of $154 million for that part of the segment. Inside content, the company reported 3.5% US iCasino market share, about 92% US market access, 19,100 plus aggregated games, and 74 unique games launched in FY25. Inside platforms, it highlighted about 76% recurring revenue, presence in 163 jurisdictions, more than 271,000 connected EGMs, and about $500 million of annual online GGR processed. This matters because Aristocrat Interactive is not just one product line. Its own site describes a 5-part structure that includes content and aggregation, iGaming and sports, gaming systems, iGaming white label, and iLottery. The iGaming and sports page talks about sportsbook, PAM, KYC, CRM, and modular services for regulated markets. The iLottery page talks about player account management, marketing systems, RGS, CRM, BI tools, and safer play technology. So the business is trying to cover a large share of the regulated online value chain. At the same time, Aristocrat is still refining this segment. In the 2026 CEO's address, management said it plans to exit the interactive white label business, which contributed $36 million of FY25 revenue, but negligible profit and did not meet the internal return hurdles. That is a useful reminder that interactive is still being shaped. It is growing, but it is not yet a finished, steady-state business. Another major part of the Aristocrat story is capital allocation. The company returned $1.5 billion Australian dollars to shareholders in FY25 through dividends and on-market share buybacks. In the 2026 chairman's address, Aristocrat said the board had authorized an additional buyback of up to $750 million Australian dollars, bringing the total current program to $1.5 billion Australian dollars through 5th of March 2027. The same address said that since commencing buybacks in 2022, Aristocrat had bought back close to $2.7 billion Australian dollars of shares. At the same time, the company is still keeping balance sheet flexibility for acquisitions and investment. Aristocrat's financial summary says free cash flow funds both organic and inorganic growth, and that the group is targeting a medium-term net debt leverage ratio of 1.0 to 2.0 times. But because operating cash flow is strong, the business currently sits below that range unless it uses balance sheet capacity for material strategic M&A. That is management's own way of saying there is room for future deal-making if the right opportunity appears. There is also an intellectual property angle that viewers should know about. In the 2026 chairman's address, Aristocrat highlighted its recent settlement of litigation against Light & Wonder and framed this as part of a broader effort to defend its IP and protect the value it's of innovation. That is not a reason by itself to like or dislike the stock, but it's part of how management thinks about maintaining its position in gaming content. So what is management guiding for now? Aristocrat said in its FY25 materials that it expects NPATA growth over the full year to 30th of September 2026 on a constant currency basis. The company said this should be supported by continued revenue and market share growth in Aristocrat Gaming, continued market share growth from Product Madness, with more DTC contributions and accelerating performance at Aristocrat Interactive toward a FY29 $1 billion revenue target. The 2026 AGM materials then added more detail. Management said gaming market conditions had been resilient so far, with operators still supportive on capital budgets, and that it was targeting net additions of 4,000 to 5,000 gaming operations units in FY26, weighted to the second half. For Product Madness, it said DTC migration had continued, that DTC was already running about 20% in the early months of FY26, and that the new NFL-themed social casino game had already launched. For Interactive, it said iLottery was still growing, that further content launches and state expansions were underway, and that the market was anticipating the online release of Lightning Link around July 2026. There are also specific Interactive growth points worth noting. Management said the Massachusetts iLottery contract starts in July 2026, the Michigan iLottery arrangement shifts to an exclusive basis from July 2026, and Aristocrat Interactive expects to be live in all 7 legal US gaming states as 2026 progresses. Again, these are not our forecasts. These are the company's own opportunity statements. One final nuance on outlook. The 2026 CEO's address explicitly said performance is expected to be weighed to the second half because of the timing of product launches in both gaming and interactive. So if viewers later compare interim results with the full-year target, that timing point matters. Now, let's put the stock chart on screen. The stock at the time of recording was trading in the mid-46 Australian dollars range. For viewers, the chart is useful for context, not for a recommendation. This is a public company. The market prices its land-based exposure, social casino exposure, online RMG ambitions, capital returns, acquisition strategy, and overall execution every day. Our role here is simply to place those pieces next to the company's own official disclosures. So what is the clean takeaway on Aristocrat? Aristocrat is one of the largest and most diversified public companies connected to the broader gambling and gaming ecosystem. It has a very large land-based slot business. It has a scaled social casino business through Product Madness. And it has a growing online real money gaming business through Aristocrat Interactive. That makes it broader than a pure iGaming stock, but still highly relevant to anyone trying to understand the publicly traded gaming landscape. The latest official picture is a company that reported strong FY25 revenue growth, profit growth, cash flow and shareholder returns, while still investing heavily in product and technology. Management's own message is that gaming remains the core earnings engine. Product Madness is performing well in social casino, and Aristocrat Interactive is the next major growth leg. At the same time, the company is still actively reshaping that interactive portfolio and still relying on future launches and market share gains to scale it further. This was Aristocrat, not a recommendation, not a financial advice. Just the company, the products, and the latest official facts.